Hello, everyone, and welcome. I'm Dr. Al-Rishani, and today we're going to dive into a topic that you'll see again and again in your careers in Canadian tax, the GIFI system. So let's jump right in. Our goal today is to demystify the GIFI, which stands for the General Index of Financial Information. Now, I know it sounds a little technical, maybe a bit dry, but believe me, this is a fundamental concept for compliance that you're absolutely going to deal with out in the real world. So it's really important we break it down and understand it well. So here's our game plan. First, we'll tackle what the GIFI is, and just as importantly, why it even exists. Then we'll get into the core principle behind it, the two main ways you'll file, and the specific schedules you need to be aware of. We'll finish up by looking at a few special cases, and then I'll leave you with a final thought. All right, Section 1. Let's start with the most basic question. What problem was the GIFI created to solve? Why do we need it in the first place? Well, try to put yourself in the shoes of the Canada Revenue Agency for a second. You've got millions of corporations across the country, and every single one, from the corner coffee shop to a huge tech company, has its own unique chart of accounts. They all call their expenses and assets slightly different things. So how on earth could the CRA possibly manage and analyze all of that data in a consistent way? It would be a nightmare, right? And that's exactly where GIFI comes in. You can think of it as a universal translator for financial statements. It's a system that assigns a unique code, a specific number, to every possible financial item. So cash on hand has a code, office supplies has a code, sales revenue has a code. This system allows the CRA to take financial statements that look totally different and instantly convert them into a single standardized format for analysis. It's all about creating order out of potential chaos. Okay, so we know GFI is a coding system, but how do you actually apply it? That brings us to the core principle you have to follow. Here is the absolute cardinal rule, and I want you to burn this into your memory. The GIFI is not for summarizing, it's for translating. The level of detail in your company's own financial statements must be mirrored exactly by the GIFI codes you submit. You can't just take 5 different types of professional fees and lump them all under one GIFI mode. It's got to be a one-to-one match. And this slide really makes it clear. You see cash on the balance sheet, that's GIFI code 1001. Simple. You see a line for office expenses on the income statement, that becomes code 8810. So the logic follows. If your internal income statement has, say, 40 distinct line items, then your GIFI submission to the CRA better have exactly 40 corresponding GIFI codes. It's a mirror image, just in a different language. Okay, we've got the what and the why. Now let's shift gears and get practical. How do you actually file using this system? Well, there are basically 2 ways to do it. You've got 2 main paths. The first, and by far the most common these days, is using CRA-certified T2 tax software. This lets you file electronically or create what's called a 2-barcode return. The other path is the more traditional, old-school method, filling out the physical paper forms that the CRA provides. And how you handle the GIFI is a little different depending on which path you take. So if you're using tax software, the whole process is really nicely integrated. You'll just go line by line through your financial statements, find the right GIFI code from a drop-down menu in the software, and punch in the dollar amount. That's it. It's clean. And importantly, if you have any notes to the financial statements, you type those directly into a dedicated section within the software itself. Everything is contained in one digital package. Now, if you're filing on paper, it's a bit more hands-on. You'll be manually writing your GIFI codes and the dollar amounts onto the proper forms. But here's the key difference to watch out for: the notes. With a paper return, you can't just write them on the form. You have to print out your notes to the financial statements on a totally separate piece of paper and physically attach it to your T2 return before you mail it in. It's a small detail, but getting it wrong can cause delays. All right, this next part is extremely important, so listen up. Not all companies have to file this same GIFI information. The requirements actually change based on the size of the corporation, and there's one number, one threshold that you absolutely have to know. And here it is, $1 million. This is the magic number, and it applies to either gross revenue or total assets. As soon as a corporation hits $1 million in either of those categories, its GIFI reporting requirements get more detailed. This is one of the most fundamental dividing lines in corporate tax compliance, so you've got to remember it. So let's start with the smaller companies. If a corporation has both its gross revenue and its assets under that $1 million mark, life is a little simpler. They only need to fill out one form, the T1178, which is the short version of the GFI. It's a condensed form that requires less detail. But the second a company's revenue or its assets equals or goes over $1 million, the game changes. They now have to file a full, detailed set of forms. That means Schedule 100 for the balance sheet, Schedule 101 for the opening balance sheet details, and Schedule 125 for the income statement. You can see how the CRA scales the reporting burden based on the size and complexity of the business. Now, you know as well as I do that tax law is never simple. There are always special cases and little details you can't afford to miss. So let's go over a couple of really common ones related to GFI. So what about any inactive corporation? You know, a company that didn't do any business at all during the year? Well, there's good news. The rules have been simplified. These corporations don't have to attach Schedules 100, 125, and 141 anymore. It just makes things easier for dormant companies. That said, the CRA does note that if you happen to file them anyway, they won't reject the return. They'll still accept them. Okay, everyone, I really want you to focus on this one. This is a classic trip up for new tax preparers. Schedule 141. The CRA's language here is as direct as it gets. You have to complete this schedule, even if your company has zero notes to its financial statements. It's a mandatory form for any active corporation. It asks some basic questions about the person who prepared the statements and the accounting standards used. You cannot leave this one out. Okay, we've covered a lot of ground, so let's wrap this up and distill it down to the most important takeaway from our lesson today. So, if you remember just one thing, remember this. GIFI is all about standardization. It's the architecture that allows the CRA to efficiently process a mind-boggling amount of financial data. Now, this system was a massive step forward. But as the next generation of tax professionals, I want to leave you with a question. In a world of increasing automation, AI, and real-time data, what comes after a system like GIFI? What will tax reporting look like in 10 or 20 years? That's something for you to think about. Thanks for your time today.